So, I feel like we can get started, of course. Before we get started, right, we will have a giveaway at the end of the stream for those of you who stick around. I will be doing a giveaway at the end for two 1 month memberships in the House of Stacks if you are not currently in the House of Stacks, right? Going through our day, we had a pretty good day. I think today we were green on the day, about 104 to 65, very nice, as well as profits and percents looking pretty good. Let's go to the beginning of today. Minnesota Tom 4%, Star Killer 3%, Flexing Joe 22% on his account, Alex 1.5%, The Bastard 21%, Dave 5%, Hoku 6%, Nathan 1.5%, Mish 8.72%, Little Beard nice $224 gain, 5% of their account. Bama Guy took a little tag. Dragon Sum 5, Arrive 4. Alex bumped his up a little bit more, and Wonder Brad going through right 9%, 9.31% on the day. Very nice, guys. Congratulations. So going through, let me see. Tonight's live session. This session is, I feel like everyone's here now. This session is really in hope and in aim to provide you with some more clarity in terms of the market or what you should be looking at in terms of day trading. These are things that I find in the market and I see consistently within the market that provide me opportunities to capitalize and make profit. Now, it's not more so that I'm searching for these to make profit, but I'm searching these to put on quality trades. I need to be able to respect my money and put my money in the best situations possible when possible. So, I said I was going to touch on risk management tonight. So there's a lot of different forms of risk management. You can use risk management in terms of basing a trade off of a key level. Like if you guys watched on stream this morning, we nailed, what calls did I take? Right off the morning, 364 calls, right? I got those at about $1 right here, right on this dip into demand. I didn't get right on the dip. It did pop back up. I was trying to bid in a little bit lower, but I didn't get filled. But why would I have taken this trade, right? What confidence gave me to go long? And many times traders find themselves in a predicament where they are paralyzed by the kind of information provided, right? They are like, I don't know what to do. I need something screaming at me in order to put on a trade, right? I need it to be so obvious that then I put on a trade. Well, when you do that, right? When it's very obvious, you see like a big breakout or large green candles, even if it works out for you guys, I know I've talked about this a lot, but even if it works out for you, okay, you are building bad habits, right? Bad habits, especially when you begin to size up or if you become more profitable. When you are putting larger position sizes into a trade, you have to find yourself at the lowest risk possible, right? Slapping things on a breakout, you're already buying things at retail prices, right? Very high premium prices. When in reality, myself, I'm a frugal person. I like to buy things on a discount, right? So dip buys, I mean, obviously, you want to buy things cheaper if you can. So right off the open, why would I have taken the 364 calls, right? A lot of you guys would have been saying this is chop, this is the open, maybe, you're fearful or anxious. I simply took the trade. Hey, this was the most recent higher low, tight small body consolidation. I just drew a zone off of this lower wick on this candle, right? Extended it out. If this level failed, my trade was negated. I would have been stopped out, right? Stopped out for maybe 10, 15% or so. Okay. But on this trade, right? The reason why I stress finding your stop loss first is because it takes away from the shock value of the trade, right? So many times traders, when they put on a trade, they're like, this is going to go up. I need this to go up. This is going to make me money, right? That's the only reason why you click. Intrinsically, you click the buy button. But when it goes against you, right, let's say that this actually went like this, right? You are shocked. You're like, oh my God, right? I'm losing money. I don't know what to do. I only have a certain percent or a certain amount of money in my account and I already FOMO'd a big position size off of the open, this trade has to work out. Otherwise, my day will be wasted, right? I won't have any money available to trade, and this money has been useless to me. It didn't make me any money. It's actually lost me money, right? But you have to get out of that kind of, analysis paralysis and say, hey, I've identified my stop loss. If this trade does not go as planned and how I, have deemed the time frame of the trade to go, then it's time to get out of the trade. So, you have two options here. One, you either don't get stopped out. This support level is actually held, or demand, whatever you want to call it, is actually maintained, and you are profitable. It goes in your favorite direction, or you get stopped out. It's that simple, right? There's two occasions, two outcomes. Okay, there's no reason to be sitting here doubting yourself. What do I do? You're either in the trade or you're not, and you have to think of it very quickly. Otherwise, you will be punished. Market makers love to feast off of your, indecisive and very impulse kind of emotions that you may be experiencing on a daily basis, right? Think about if you took puts here, right? You're risking the high a day, right? You took puts, and then, your stop loss is enacted by this trend line being hit, and it moves up, right? Yeah, you're going to take a little bit of a tag, maybe 10, 15%, right? But what if you don't? What if you're like, oh, this could work out, or, going into the thing like, hey, maybe this will work out in my favor. I've used all my buying power already, or used a big portion of my account. This has to work out, right? Your then 10 or 15% trade turns into a nightmare, right? It turns into negative 30, negative 40, negative 50%. And you're left sitting there like, oh, why didn't I just follow my plan? Why didn't I just follow my plan, right? So really, we need to be able to remove the shock value from our trading and just understand, hey, two things are gonna, there's one out of two things that will occur. I'm either gonna make money on this trade, or I'm gonna keep a very tight stop loss, a very tight tag, okay? So, moving forward, I have, let's see, let me pull notes. Make sure that your losses are reasonable and manageable, right? That when you're taking on a trade, these, it's kind of like, the Goldilocks thing, right? It needs to be just right. If you have too tight of a stop loss, I know a lot of traders maybe, let me see, where would they have gotten wicked out? I don't know. Okay, I don't know. Okay, so just in any sense, let's just say you get wicked out, right? So you shouldn't take that as an offense. You shouldn't be, kind of hurt by that emotionally or whatever, right? You should really take it as a lesson. Your stop losses have to be able to be, like I said, manageable and reasonable. Okay, reasonable. You have to be able to understand that risking too tight or too small means that you must be very accurate and precise with your entry. You have a higher chance of getting wicked out or getting stopped out if you're not risking enough. Now, as retail traders, we can try our best to pinpoint the best entry, everything like that. But many times, I would say majority of the time, we do not have the best entry, right? We're either too slow to react to it, or, we're buying the ask or market buying, whatever it may be. And no one ever really has the absolute top or the absolute bottom. So when we're going through that, we have to understand that we have to risk something appropriate. This is why, regardless of this trend here, right? If price comes down, imagine this is a line chart. If price came down and it hit this level instantly, I would not stop out. Even though this is my stop loss, right? This is my stop loss area. I need to be able to stop out in an area below. Right, and that's really gauged up to me and dependent upon my entry, right? Did I buy too high or did I buy rather low? That's really dependent upon how much further you can hold under the support level, because many times we see an area of liquidity that actually gets bought up, right? So like here, right here yesterday, right? So let me remove this, right? You can have like a support, right? It wicks below, but if you stopped out right there, you got wicked out, right? It comes down here a little bit, but doesn't spend very much time, from about 110 to 122, about 10 minutes, and you're not too far from even the most recent low right there, right? So, you know, keep your losses reasonable, and, you know, you have to be able to risk in order to put on a profitable trade, right? Being stingy with trades really leads to that over hesitation and over kind of I don't know, over analysis before taking to a trade, right? You're gonna need you're gonna feel like you need too much of an obvious signal to enter the trade, and you're already too late. So also, right, too large of a stop loss and you're risking too much, which is not sustainable for growth, right? In the long run, you know, if you're risking 20, 25, 30, 35% on a trade, that's not really consistent or reasonable. Even if you take a 30, 45% loss, right, you have to gain, I think it's like 60% or something like that in order to recoup that loss, right? So you have to make it twice as big just about as a winner to negate that loss and come out green. So really, guys, you know, my risk parameter is about 10 to 15% on a trade. And even right here, right? So if I go through, what did I say? 364s off the open, the calls. We'll send that to 3. So right off the open, I mean, I think I have a support line here. Maybe, no. So, I mean, right off the open, right? I mean, I can show the call out. Let me see. Right here. Looking at 364 calls around 80 cents. That's at 931. Scaling in at 932. Okay, so 932. We'll go 931, 932. This is that candle right there. So even at the low, you know, about, you know, around, this is like 74. So that was, you know, I had this level here. Now, you're not always going to get the absolute bottom, of course. So I was trying to bid in around 80, but I actually got in about $1, which is completely fine for risk, especially off of the open, right? Very tight risk, understanding that this is my risk level. But, you know, you have to risk around this kind of price, you know, 15% or whatever. You know, I risked 15%, right, to make over 200%. These went from $1, as you can see, are $1 up to $3, right? That was a very nice move right here, solely just off of basing risk off this most recent higher low pivot. Okay. Also, another trade that we took, I'll go through on NVIDIA. It was the, what was that one that I took? I took it off of an options contract chart. And I'm going to show you guys how to do that tonight. How do I hold through consolidation? I'll show you. Or how do you identify an entry through consolidation even? Right, so right here, I posted this at 11:18. This is the NVIDIA 275 call options chart. Now, many of you may not use the options chart, but this is a tool that I use every day, or at least try to use every day. And I said at 11:18, the NVIDIA 275 calls, I'm scaling in 4 minutes later into the 275 calls, right? That's at 11:22. So let's pull up NVIDIA 275 calls, send that over to 3. And what did I say, 11:22? Right here, yep, there's the chart. So when you go through a consolidation phase, I want to show you here on NVIDIA, around the same point right here. When you go through a consolidation phase, right, this is the same, you can see the spike up, goes down, consolidates here, right? I'll move this kind of price level. You can see the range, right? You can see the range, but you can also see support that I had marked there, right? So you can also see the support right about there, that same level. Now, when you're going through the consolidation, you don't have to have that, right? You should, I'm going to clear this out. This is what I do, right? At this point, I saw it at 11:18. This is where I mention it. Okay, and at 11:22, that red candle, that's where I take it, right? But before taking this trade, I noticed, right, you have a support and a resistance right there. Now, with the support and the resistance, you can beef this up by, you know, turning it into a supply and demand, or supply or demand zone within the consolidation phase, right? Just like you can here. So how would you do that? You can see this kind of doji, white doji candle, right? You can draw that out as a zone, right? You see I've just marked that white candle there. And here you have your white doji. You can use either the white doji in combination with this red candle or just the red candle itself. I'll draw the white doji, right? And you can see I mention it right there at 11:18. You see the time frame right here, 11:18 a.m. this morning. I mention it. Hey, look, this is the options contract. You can see it here. It's just now pushing into. It's at 4.1. Okay, now I take entry scaling in 275 calls. Okay, at 11:22. So right there in that white arrow, you can see that. Now at this point, I was not even looking at Nvidia, right? No, I was looking at QQQ and I think Tesla or something. I was not even looking at Nvidia because I was trading based off of these, my risk management, 10 to 15%. You guys can do basic math, right? So if I got an entry here about 4.3, okay, 4.3, what's 10% of 4.3? 43 cents, right? So $43. That's 10% of the contract. So we'll mark it down 10%. So from 4.3, right? 4.3 minus, 43 cents. That's about, what is that? 3.87, right? Look where we are. 3.85 is the risk. You see that? Right at about 10%. 3.85 that's a support. I'm willing to come in here and take a bit more of an aggressive entry, knowing that buyers will absorb more down here because that's where the position that's where their position was, and it was about 10%. I mean, I can draw this from here down. You can see that's negative 10.73%. Look at the box. You see this little box right there where it says negative 10.52. I draw it from the entry down to the support. That's negative 10.93, negative 10, whatever percent, right? That's your risk. So I risk 10%, right? To make what? Right? To make 44%. So that's 1 to 4 or 1 to 4.5 just about on this trade. Would you not take that trade every single time? Now looking at Nvidia, many times when we are trading the option, right, or the underlying chart, when it pulls back on a dip, right, or any of these dips, right, we may have that kind of bias, right? Of course, this isn't developed yet. We may have that bias of like, oh, consolidation is bad, right? This is leaning bearish, but looking strictly at the options contract chart, I can see that there are higher lows. I can see that the Qs are maintaining higher lows, especially on the 10-minute, 9 and 20 EMA. This is exactly how I'm getting into a lot of my trades with low risk. Okay, low risk. I mean, you got who was in the stream that took that with me? I forgot who took them. There was a few traders that took them with me this morning, and this was $170 gain per contract. But I think Gene is asking, how do I manage the trade once it hits the next zone? Yeah, Bless Anubis, right? He was in it. So where are our targets? Of course, supply. We want to scale out in supply, right? Why did I say 6? Remember I said, hey guys, I want 6 on this. I want 6 on this. The chart told me where to sell. Did it not? Look at the most recent pivot, right? The most recent high, $5.99. I got my $6 scales, right? Exactly, Deb. And Deb said, because I already saw someone get 6. So if I saw someone get 6, that means that there are orders up there, right, that are looking to get filled, right? Shorts are looking to sell the calls, right? Shorting up here at 6. And what do? They shorted it from 6. They brought it all the way back down. Look at how this is respected all day. I draw this demand. I could have abused this zone all day. Look, I'll blow this up. This is why I love trading options, because many times the market makers will manipulate the hell out of these contracts. You can see here tomorrow, watch for this, okay? Watch for these zones to be respected. Now, I don't see them respected time and time, right? Or, day in, day out. But you can see that buyer did not let anything close under 385. He is absorbing, and absorbing more here. He kept buying them under $4 and offloading them over $5. Right? $100 gain a contract just by looking at the options contract chart, right? I can show you some more examples. Let's go to QQQ. How many of you went through a choppy day on the Qs, you feel like, right? Anyone feel like that? It was choppy today. So, yeah, I mean, if you felt that way, right? Remember, what are the two phases, guys? You have trend and consolidation. The reason why traders are failing, newer traders are failing, is because it's the same thing. I'm going to talk about it every night until you guys understand. Okay? When it is trending, traders are like, I'm too anxious to take this. I'm not confident in the trade. I don't know what to do. I feel like this is just ripping up. I can't analyze it. When price slows down, when it begins to make those obvious pullbacks, you're too late, right? Let's say like, oh, trend is slowing down. Now I can get my EMA pullback. And then you're like, wow, now I bought the calls. Now I'm down, right? Now price is pushing. Now I'm losing money. Trading sucks. No, trading doesn't suck, right? You just are taking things too eagerly or trading momentum during a consolidation phase. Okay, so let's go through. We're just going to try to find an example here, right? So this pops up. You get a resistance, okay, right here. So maybe you want to continue to trade calls after it bounces right here at about 1017. Okay, so this is at 365.50 practically. Maybe you want to trade 366 calls, okay? So we're going to trade 366 call, or that's the puts, 366 calls right there. Send to 3 charts. Maximize sell, right? Now you can go through here. One second. You can go through here. You can see, right? Understanding from the underlying. Okay. Always don't look at charts just like, hey, this is, this is whatever, can't, right? Look at it as buyers and sellers interacting on this trade. So on this pop up, each higher low, the higher low right here, right? This higher low right there, or this higher low right there. These are clusters of where buyers' orders or where buyers most recently are sitting. So, just right there, you can mark a support. Same thing on the options contract, okay? Pops up, boom, you mark a support, right? You could have marked any support. You could have marked the one down there, whatever. It doesn't matter. As long as you can pop up, you see the resistance where it shoves down, draw your resistance, okay? Now, beef this up. Use your supply and demand. Remember, large upper wicks at the top of a resistance or a rounding top. Draw that. You can include the body if you like. It's not going to add too much width on the zone, right? Small tight body consolidation prior to a large move up dictates a zone, right? Or down, a demand zone. So pushing through here, you can see these buyers absorbing 120s, right? Even down here, that hits $1.04, right? And it only is down there for 4 minutes, okay? But they're absorbing $1.20, $1.20. This is where they all got filled, $1.20, right? Pushing it up. Look at the supply. You know where to sell. Pushes up, right? $1.20 to $1.70. $50 a contract. That's a lot of money per contract. You buy 10 contracts, that's $500, aiming strictly for the supply, right? Pushing down, right? They absorb $1.20, $1.30 again. They push up $1.80. You lock in your gains. You lock in some profit. You leave the rest to ride. Pushes up, you get your scales over 2. That's a fantastic trade. It's over $100 a contract. Just by noticing, hey, when this begins to trend, I know at some point that the trend is going to form into a consolidation phase. We saw that. I know I have a lot of trend lines and stuff on the Qs. I have to go over a few things with you guys tonight on my plans, right? But you can see trend. Now we knew. I was like, hey, this is where I got all out of my 364s and 366s earlier in the day, because I was like, hey, I'm going to lock in my gains. That was an insane move off of the open, literally the bottom. This was the top for that leg, and then it's going to consolidate, right? So going through, try to manage your risk. Use that options contract as best as you can. Look at later in the day. Let's say down here, 367. Maybe you want to trade like 368s or 369 calls, right? So we'll look at those 368s. All right, look at the support forming right there. That pops up, breaks, and bases on the previous resistance right here at about 1117, right? These are the 368s that I was just talking about, right? So we said 1117, right? 1120, just about. I mean, look at the supports all day. Look at this support. and that support, right? And the resistance. You know, you have zones here. Draw those out. Draw this out, right? You can see where they're selling and where they're buying consecutively all day. That's the beauty. People think like, you know, options contracts, like it's okay to buy them high. It's really not okay to buy them high. You get a really bad entry on the options contract, right? Always compare how far away you are from the support or the demand. You're stuck there. You know, if you had a 95-cent entry, you thought that buying it at $1, and that's the problem. You go into the trade, right, to the options book. You're like, oh, that's $1. That's cheap, right? That's cheap enough for my account. I can buy that. You know, that's not a lot of risk. Well, look at the options contract chart. That's too high. You're buying at literally the selling liquidity all day. You now have a trade that is never going to breach past strongly over $1 for the 0 day, right? You have to understand where exactly they keep absorbing. You can see early in the day, someone came up at 37 cents. They bought it again at the end of the day. And when this support formed at 11.18, right, we saw that consolidating 11.18, 11.18, 11.18, right? We know 0 days peak down much further, but you can see that support, right? Or that demand right here. They were buying it at 70 cents, 70 cents, buying it all at 70, right? They broke in base, bought it at 70 again here, selling all above at 1. That is why it's so dangerous for newer traders to be like, hey, I'll be okay trading these at $1, right? I'm just going to get into the trade at $1. You have to check the chart. You have to see where in comparison your entry is to those other traders, okay? So going through, I'm going to be covering, I'm going to be covering, right, some supply and demand, so a little bit more. I want to talk to you guys. Every morning I post this. Okay, I post this on Twitter. I want you guys to pay attention to this. Okay, this is really what you should be doing each morning. I know it's hard for me to cover the questions because I'm trying to just go through the lesson, right? But every morning you should be trying to do this, right? You should try to find where bulls and bears are trying to push price, right? I posted this a little late in the Discord. I posted it like a good bit before open. This was at like 9:09, right? Same thing, same words, everything. I forgot to hit send on the tweet. So this is about 20 minutes before the open, giving you some time to study. Now I say here, right, that you should always have a situational or directional analysis, right? Understanding both kind of sentiments and what their goals may be. So going through here, you know, this is on the Qs, of course. Longs are looking to reclaim the 364 supply in order to push towards 366, 367 supply with enough strength. 369 and 370, okay, is a big target for bulls. I also say for the bears, the short perspective, shorts are aiming to break the pre-market low right here and push price into the previous day low demand of 359. Below this, they target 355, 356. You can see all of the zones here, right? Let me pull that back. Right here. Bulls are aiming to reclaim the 364, okay, 364 supply, right? Above 364, they're targeting 366, 367, okay, 366, 367 is right here. And then above that, 369, 370. Okay, 369, 370 is right above it. Where did I get these zones and why did price follow through to those? You can see on the intraday. Let me get my zone back here. I think I'm missing one. This one. Because, look, the only reason why I deleted the zone was because on the intraday I needed something a little tighter. Okay, so where did I get these zones? Now, I normally draw these on about the 1 hour or like the 10-minute or something. Really dependent upon what I'm looking at, right? But you can see here, I've marked the tweezer bottom capturing these lower wicks, okay? I've marked this lower wick here on the pre-market low. This is a higher low zone, right? This is a crucial level where bulls will try to defend. Otherwise, if they fail their defense, that they will push down to the next zone to absorb. I marked this small tight body consolidation prior to the large move down. This is a key zone, right? I also have this large upper wick here marked as a supply zone. And then this tight small body consolidation prior to the large move down. So I have two forms of zones, right? I have upper wick zones, right? Upper or lower wicks that I just draw a zone on, or small tight body consolidation prior to a large move in either direction, down or up, okay? I'm going to go through, draw some examples, but you can see here, price rips through that. It then stops. It stalls for a moment. You can see we have a little hammer candle, right? Dragonfly doji, whatever you want to call it, right? And then after it briefly consolidates there, at the end of the day, it hits my target of 369, almost 370. Just like we had planned out earlier in the day, right? 369, 370. It stopped at each of these kind of zones to sit there and, give shorts the opportunity to decide what to do next, right? So how can you do this each morning? So I haven't been trading SPY, right? But let me see here. Going into tomorrow, right? I'm going to go on my 1 hour. I can see here on SPY, right? SPY, before, I know a lot of traders like, hey, what about all these zones up here? Well, before we interact with these zones, we must get through what we most recently have on our left. Correct? Let me clear this chart. So this, you kind of have an inverse head and shoulders, I can see, right? Left shoulder, head, right shoulder, consolidation, up, right? But where are the zones? You can see here that there's not too much, but this large upper wick, look at how price tells a story, right? So it's shoving down, they're selling, shoving down. This red bar right here, this is not short selling. These are buyers stopping out. You can see the support. Once they crack that support and begin to close on the smaller time frame, like a 5-minute or 3-minute or something, right? This is buyer stopping out. Now, on the push up, you see this upper wick right here. When it pushes up, this is the location where shorts most recently have entered into the position. So if that's where shorts have most recently entered into the position, that's a very valuable key point of information that I need, right? So I will draw just on this wick. You can draw either to that wick. It doesn't really matter. You can draw both, right? Just capturing the wicks. Edit properties, no cheating. Edit properties, extend the days out, right? Let's see how the zone's going to be respected. Right, you see that. Now, where will price go? So we have said here now that SPY is trying to deal with this 456, 457.50 supply zone. Above this, where will price go? Right, where will price go? Right here, you can see this. The chart's telling you everything, guys. Small tight body consolidation prior to the next move down, right? To a violent move down or up. Draw the zone, right? I'm gonna draw this dragonfly doji right here. I'm extended out. Now, you guys can screenshot this chart tomorrow for tonight and review it tomorrow and see how these zones may interact at the end of the day tomorrow. Okay. Now, what zone is this? We have broken and held over 455. Psychologically, where will buyers try to push next? They will try to push from 455, right, to what? What would you guys say, right? Psychologically, psych levels, just basic things. I'll take a water break. 460, 460, boom. Moving in increments of 5, right, nickels, okay? So, 455, if they break and base above, they will push up to this 460 supply area. So this is 459.70 up to 460.5. They will push up to this, right? They can continue that stair-step pattern. Now above 460, where will we go? Remember how I dictate my zones? This is kind of too broad for me to draw a range like so, right? It overlaps the other zone, correct? I want my zones to be rather tight and accurate, so I can draw just this upper wick right here. Just that upper wick. Edit properties and extend it out, okay? Extending that out. So let's see, over 457, 458 supply, we should target 460. Closing, breaking and basing above 460, 462. Okay, 462. Now on the hourly, one second. On the hourly here, right? Above 462, you're not really seeing too much, but I do see this little leg here, this little pop up, short down, it pops up, rejects again, and then it has a big move to the downside. I would capture this right there, right? Edit properties out, just extending it out, whatever, send it to May, right? 465. You see it where that lines up, right? So now we have a story to look into the week, right? 458 up to 460. If we claim 460, 462, if we break this level, shorts will cover, right? Because why? It is a higher high that will force them to stop out or cover their position. And over 460, 461, or excuse me, 462 right here, we should target 464, 465. Where's 465 at? Whoops. Right there. 464.91 at the base of that supply, right? Taking this from 455 practically to 465, right? Targeting these zones as they move on. Yeah, I'm just using the rectangle tool right here. And I draw this out, right? However. So guys, I'm going to cover into some winning trades kind of analysis. Okay, so going through, I'm going to review some trades that I took today. I mean, I already have reviewed some of the trades that I took today, so maybe I can just go through like well, what I traded Tesla. We can go over Tesla. Tesla was fun. Okay, so this is a key point, right? I think actually I was on the 1 minute. Right? Yeah, there we go. So this is a key thing to really like look into, right? When we are taking trades, right, we really need to be able to train our minds to, you know, to buy the opposite, right? So, you know, really being able to, you know, buy the calls on red candles, the down tick, right? And buying puts on like the upticks near a rounding top or a point of reversal, but where there's green candles, you're going to get better entries. But it is confusing to a lot of traders. So many times when they see this big green candle, right, this is good enough for them to go over to their active trader and slap the ask, right, or market buy at this point, right? When they see this big green candle, but what it really does, even though it works out in the end, you're put through a lot of kind of emotional trauma and stress that's unnecessary, right? Now, since you see this big green candle, you're buying the premium, you're slapping the ask, it pulls back on you. And on something like Tesla, this is probably like $60, $70, $80, you know, per contract pullback. It's not really ideal, right? You really want to get yourself tuned into the market on buying on pullbacks and putting yourself in the lowest risk possible, right? The lowest risk position that, you know, you can achieve at that point in time. So right here, I said Tesla 1200 calls at this point. Let me see if I can find it right here. Tesla 1200 call, scalp, tight risk at 1050, okay? Taking right here, 1050. I'll move the candle back some. Right there, 1050. You see that 1050 candle? Why would I have called that out? Why would I have called the Tesla 1200? Does anyone have an idea? Nine EMA, right? Gunner's got it, right? 9 EMA. I mean, it's as simple as that. But what then allowed me to enter that trade, right? I have the low right here. You can see I marked a support. I have the low. I have the 9 EMA, which is typically my like entry kind of trigger, right? Something like, hey, you know, you should be looking at taking an entry right here. Also, normally when you're taking a trade off of your whatever time frame EMAs, always look for the best time frame that is being respected. But normally you enter around the 9 and then you use the 20 as your risk area. Remember, we never stop out right on the 20. You should leave a little bit of wiggle room below, right? Otherwise, you get wicked out at times, right? Think about this trader. Oh, I got wicked out from 1126, right? And it pops up to 1135. You just gave up 9 points. You just gave up capturing 9 delta. That's a lot of money. Okay? I mean, 9 points on an options contract trade, yeah, you don't really want to give that up just because you had too tight of a stop. Remember earlier in the lesson, we talked about if you have too tight of a stop, you really need to use that and keep that as a lesson rather than something to be frustrated over. Okay? I don't use the SMA. Yeah, and the contract was at support as well, right? Great analysis there, Frostbite, right? The contract was at support. I'm going to show you the contract, right? We'll go to the Tesla. We'll go to the 1200s, right? 1200 calls, send to 3 charts. I bought this at 1050. Go to max restore sales. I mean, look at that, right? First pullback. I said at, what time did I say? 1050. Look at 1050 right here. Okay, so you can mark that support right there. Mark the resistance. You can mark the first resistance, sure. Right? Look at this trade. Right? Where did I get? About 8 point, I didn't get the perfect entry because I called it out and then I slapped the ass. So I got to fill about, 850, 870, just about. Right? Getting the rest of my fills. But when it pushes down, right, even if I don't have the best entry, obviously you should be bidding in, right? Marking these lower wicks, marking this upper wick right here for the supply. Okay. You still see them absorb this zone. They use 830, 830, 830, right? Time and time again. Scaling where? It gave you your 2 kind of key levels, right? Gave you this one. And it gave you the low support right here, right? It gave you these 2 levels, right? Pushing this through. Hold on. Pushing that through. Hey, there's your supply. There's your demand very early on, right? Then that developed throughout the whole day. You could have taken for a long period of time. Looks like from 1050 all the way to where it fails about 12, right? So a whole hour taking scalps, right? 830, 950. 830, 950. 830, 950. Right? $120 scalps trading the same contract in a channel, right? This granted me, right? You can see that it's at support. Also, on the underlying chart, right? We'll move this back. On the underlying chart, 9 EMA, I marked the support. I will use this support in confluence with my 20 as a risk area. This gives me the ability to manage risk and apply risk at any point on the chart. A lot of traders have issues buying high and selling higher. This was high. Look how far extended we were on Tesla. My entry is way late, right? But what is already high can go higher, and what is low can go lower, correct? If you hesitated on this trade, right, that's solely due to the fact that, one, you felt like you didn't understand that you were buying a dip when it was high up, right? Allowing you an entry into the trade, as well as, understanding that, there are plenty of opportunities all day, every single day on every chart, right? I think someone was asking me to go over entries on the Qs, right? I'm going to give you entries just off the 1 minute. Okay, there's my chart cleared out. Let's go through it, like try to go through it candle by candle, okay? So you see this big rip up. Do we buy here? Right? Do you buy right here? Now don't lie, right? Who bought right here? Don't lie. Just be honest. Are you a trader that like, hey, this is consolidated and it's the open. Now it rips up. Now I'm buying in, right? Now I feel confident. Now the confidence is flowing through. And even though it works out at the end, obviously at the end of the day, you have to put yourself in the position where you will begin to be consistent, right? So going through here, if it's far extended, look at the space. I know it's just on the edge of the screen. Look at the space here, extended from your 9 EMA. I'm looking on the big rip up. What am I looking for, guys? On the first spike up. You guys in the House of Stacks know, right? 9 EMA touch. You get your first spike up, go to your 1 minute, look at your 9 EMA instantly. That should be programmed in your brain. Why? Because I make a shit ton of money doing it. Okay? And we all did too today. We took this pullback today. What did I take the trade? I think it was like the 365 calls, right? At like $1.64. So pushing through, right? Pullback. Nice little rip, okay? So on the 1, right? Pullback right there. Even though, right? This is not the best pullback, right? This one's not the best because it's not as clear, but this pullback right there, that should have allowed you. This is where we got in the 365s, right? Because now the ball is in your court. You're not buying on the far extension of the EMA, and you know for a fact that price will have to come back and interact with that 9 EMA. It is a given. It must come back and touch that EMA at some point in time. Okay, so this is where you buy it, right? This is where you start to look at trades, everything like that. Where's it at? I think QQQ right here. 949, 365 calls, right? 949. What time is this? Right here, 947, right? So I got in like right on this candle right here. Okay, you take that trade, right? What are your best entries, guys? What are your best entries? Now remember, I took calls here, so I took a ladder on the 365s, right? But what are your best entries in a trend? And anything after that should be a scalp, because you know that you're having the scraps. The scraps are left. First pullback, okay, and what? Breaking base, okay. First pullback, but no, guys, the first 2 pullbacks, right? Gunner's got it. Yeah, first 2 pullbacks. Okay, so you can see here it continues forward, right? You get your first pullback. Okay, there's your second pullback. This is a little risky, especially considering the push up. This technically was your first pullback, but it was not very clear, okay? When you do have high momentum, you can trade candle by candle, but it is rather risky. Yep, yeah, I laddered. I trade 364s down here, and I traded 365s, right? You can see on the trading floor, 364s, right? Scaling in right here, 364s, and then I took 365 calls right there. 2 different strikes. Okay, so pushing through, right? Your first and second pullback. This one was actually rather riskier up here. I feel like this was closer to the pullback, but even if you got slow or the momentum slowed down, right? Even if you took that entry, and I know that a lot of traders will go through this, even if you take this entry, you either mark the low where you take the entry where you're going to stop out, or risking the 20, right? When it rips down and pops back up, this is perfectly within that risk parameter under your support level, right? To where you should stop out and manage the trade. This is where you understand that, hey, the 1 minute EMAs are no longer being respected in this trend. It's time to look at supply and demand, and in the very least sense, support and resistance, to then figure out where exactly I need to place myself onto the trade. Now, the 1 minute is tricky, right? I really recommend newer traders to be trading on like the 5 minute or the 3 minute. Okay, the 5 minute, remember, your goal as a trader is to not take a trade from here at this arrow to here. That is not your goal. Even though it's fun, and even though we would like to do that, that is not our goal. And guys, I'll be doing the giveaway shortly, okay? Don't worry. I haven't forgot. Okay, here, I'll fix the second stream. Right? This is not your goal as a trader. Even though that may be what you want to do, okay? It's unrealistic, okay? So your goal as a trader is to capture these legs in the market, right? Getting pieces of the market. That's your goal as a trader. It's not to hold through all the chop, hold through all the consolidation. You're day trading, right? We have time exposure, and the longer that we're in a trade, it may be riskier, right? We may be putting ourselves more at risk, or not locking in profit consistently. So when we see this trade, right, the 5 minute, it rips up. It's very dangerous to buy on a pullback, or to buy on a rally that has not yet touched its 5 minute 9 EMA. You know for a fact when price rips up like this, very volatilely or with a lot of strength, it has to come back and at least test or interact with the 5-minute 9 in the very least sense, okay? And that's exactly what happens. You see, tweezer bottom, we call this out, tweezer bottom on QQQ 5-minute 9 EMA. Tweezer bottom, right? Tweezer bottoms, all through all the buying on the 5-minute 9. These are your entries. You take this trade until you see like weakness, right? You start seeing candles pierce that 9 EMA, okay? And then you're like, okay, well, maybe I should start looking at offloading some risk, maybe stopping out completely, right? But those are your buys right here. That's another buy, right? 5-minute 9 EMA, tweezer bottom. Another buy, another buy. But what's the difference with these entries compared to these entries? These are later. These are you have bought after this big rip up, right? Later entries dictate quicker profit taking, because if you take this entry, you should have a stop loss there. If you don't stop out around this general area, you're punished, right? You're down right here 20%. You're down here 30, 40%, right? If you don't respect your stop loss. So even going through, right, we should also not solely be looking on the 5-minute. Look at your 10, right? Look at your 10. The 10 was very clean today, right? 10 was very clean. I think even the 15 captured this, but this was a nice YGLT. You guys will see me in the group call that out many times. It's, you know, from All Day Faders. It's, you know, he's named it. I don't. It's like a, you know, you go and learn today setup, a YGLT. Normally what it is, it's a wedge break, right? A fake out breakout practically, right? So you have a wedge, it fakes out the bears, right? Traps them and squeezes them hard, right? We had one of these last week. Let me see if I can find it. Right here, this day. Yep, this day. Right here, YGLT setup, right? Wedge, it fakes them out, right? With a breakout. Shorts make some dough, but those overextended, those later entry shorts, right? If they don't understand that quicker profit taking is part of the rules, right? It shoves down, traps these these bears, right? And squeezes them all day. Is that not what happened today? Right? Bullish, 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 right? The first lower low break. You get a nice scalp on it, okay? But if you were looking to reshort or anything like that, right? You got squeezed, or, you know, if you weren't managing your position appropriately, right? So they trap the bears, they squeeze in the rest of the day. That's a YGLT. You guys will see me call that very often, very, very often, especially if we're going to continue in a bullish perspective. Yep. So let me see here. Okay, yep, we've covered that. So, just like I have been talking about this week, right? We will be live stream day trading, just like covering all of my entries, all of my exits, my walkthroughs of the trades, and, you know, giving you my live kind of thesis breakdown as to why I am taking these trades. So, when you know, just like earlier today, right? Telling you on stream and in the trading floor, 364 calls, right? In NVIDIA, 270 calls, right here, you know, it's 365 calls, right? AMD, 107p scalps, right? There's a 365p scalps. Tesla, 1200 call out there. The NVIDIA, 275 call out, where we took that for $170 contract gain, right? You can see, where did I get the 6 target? It met 6 right there. Right, and that was my last trade of the day on the stream, right? But I'll be starting that tomorrow morning at 8:30 in the morning, and I normally stream until about 12 to 1 o'clock each day. Yes, this is Thinkorswim. How do I put time frames on the data boxes up here? You go through, make sure on your tools, right? You press settings, go to my tools on each chart. Make sure that this my tool says on each chart. Make sure you press apply. You then go to your 5-minute, right? Or wherever it says this time frame. Manage your time frame, whatever. If you want like 5-day, 10-minute, whatever, press that. So it goes back 10 days on the 5-minute chart. You press style. Okay? Save style. type whatever, right? Type, okay, I want the 5 minute. Press save. Okay, now you go to your bar. This bar should be up. You press settings, configure buttons, right, on this bar. Not the original settings, but this one, configure buttons. This will change. You go to one of these drawdown tabs. Let's say I want to change this trend line tab. Change button action. Remember, we created a style earlier with a time frame. Go to style and select the time frame that you have saved as a style, and it will use that, okay? That's how I get that question a lot, so I hope that really helps, because I'll be able to, flip through my time frames rather quickly, throughout the day. Just like, oh, this 3 minute 20 EMA, that should be the 5 minute 9. Let me go to the 5 minute, right? There we go. Look what was being respected. 5 minute 9, right? Let's see. Does this method apply to small caps? Yes, I was a small cap trader before as a large cap trader, but your tools, if you're trading small caps, I'm gonna tell you right now, right? There is money to be made in small caps, but there's a lot more money to be made in large caps, okay? And that's not me being biased. That's me telling you the absolute truth, right? The opportunities and the frequency of opportunities are much more plentiful in trading large cap options, okay? I'm just being completely honest with you. So guys, we are going to go through, and let me see. Where is the Nightbot? That's right, we're gonna do the giveaway. Yeah, I mean, I'm not gonna lie to you, right? I mean, you're gonna see tomorrow. We're gonna take trades. I'm gonna at least call a 100%er or $100 per contract trade, every single day. And whereas small caps, like, what was the top gainer for small caps today, right? 60%, right? And that was at the end. So you had some opportunities, but even here, right? Let's go to the 10 minute. Let's say, hey, I'm a dude that wants to trade small caps, right? I'm gonna buy on this 10 minute 9 EMA all day, right? I'm gonna soak this all day. The problem with small caps traders is that, like, you're just like, oh, I'm not paying attention until this big spike or this big spike, right? You guys keep buying on these big spikes where you want to absorb your EMAs. This is honestly like stupid easy. Like, I mean, I could come in and, like, just slaughter some more small caps, but I'm just not going to waste my time and efforts, right? I'm just going to trade my large caps. But, you just soak that 9 EMA on the 10 all day. I mean, look what it granted you, from about $1 to $1.50, right? 50%. That's not a bad move. But it did take all day, right? Let me see. Also, if you have enjoyed this live session, we do have some spots in the Patreon still available. I will post the link. I see someone is asking. I'm green every day, right? I mean, you guys have seen my tags, 10, 15% stop loss, maybe sometimes 20. And you cannot be fooled, right? I'm not going to sit here and say that I don't take 20% losses. Everyone takes. If you're trading options, you've taken a 20+% loss. I mean, if you haven't, you're a liar. I mean, I'm just being completely honest. I mean, you will go through a point in time where, like, you think that this is a good entry for the wedge, and then you just get knifed on a 0 day, and you're going to be down 20+%, right? And then, if you don't get wicked out, it does rip back up, whatever, but just understand that may occur, just like an offering may occur in large or in small caps, or bad news, or reverse split news, anything like that. Yeah, here is the Discord link, right? So, yeah, if you've enjoyed this session, right, I do these, I'm back on my schedule. I do these about 3 to 4 times a week. I do one every Sunday evening. Preparing you for the day trading week ahead of us. I hope that yesterday's session, for those of you in the Discord, I hope that you found that beneficial and that you walked away green. We have about 100+ videos here covering all of the lessons, necessary in order to turn yourself into a self-sufficient and independent trader, right? Aiming for profitability. Now, also, I've done these on Twitch before in the past. If you want to check out, this is my mods, or one of my mods YouTube channels, right? His donuts, right? I'll post this in the chat. You can check that out. These are all the other live sessions. Now, the older ones may not be as good just because they were, very earlier on. I think at the end of last year, about 4 months ago. But these are much more recent, right? You can see in February. But there's about 6, 12, 17 videos here, and they're all last, an hour, 1 hour, 1 hour. Right, I put a lot of work into the educational aspect of the Discord, right? Because no Discord that you join should be about callouts, right? No Discord should. I mean, I'm going to provide callouts. I'm going to provide my walkthrough and my thesis of these trades, and they're going to be accurate and profitable. But you shouldn't be joining something looking to shadow trade, right? You're never going to learn, and you'll never be that independent trader that you strive to be. So, for the giveaway, right, I'm going to give away 2 memberships to the House of Stacks. If you are not already a member in the group, I'm going to put, let's see. We're going to put, you can put stacks, right? You can put stacks. Maybe that works. Does that work? Can you get, yeah, so type stacks. Let's see if that pops up. Hold on. I don't know. Why is it not working? 1 second, guys. You guys might have to do it again. Just, oh, hold on. Okay. I don't know what happened. I'm confused. I'm not the best technologically advanced person, so. Okay, here we go. Stacks. Okay, so there. I think this is working now. We can see that this is popping up. So yeah, type stacks out and we'll roll it. Sorry guys, I don't know what I'm doing half the time. It only shows 8. Maybe it's lagging. I don't know why. Donuts, you know how this is working? Oh, never mind, it's working. 79. Okay, there we go. Okay, so I'll give you guys some time to enter. There's 240 people in here, so we'll try to see if at least we can get half of y'all. But I hope that in the meantime, right, going through, we had a pretty good green day today. We had 106 to 65. We had 2 record days. Congrats to brother Mitch and Zrak. Congratulations. I hope that you guys found this session helpful, right? I'm going to be having more of these throughout the week, and I'll only be streaming on Twitch the first week of the month. In the Discord, right? I'd stow away myself in the Discord, and we stream every day, just like the live trading in the morning. So tomorrow, I'll probably try to touch more on some supply and demand. I know that a lot of you guys are struggling with that, as well as the options contract trading. Those are two of the biggest. I know I use the 920 EMAs much more than anything, I feel like, but really we should be incorporating that options contract supply and demand much more, because I made $170 per contract, right? You buy 30 contracts, that's over $4,000, right? You're just solely trading, supply and demand on an options contract. The market makers, you can literally see where they're absorbing and manipulating these contracts, right? So I only have about 100 eligible users, right? So let's see. Remember, you got to not be in the Discord, right? I want someone who is completely new and green to the group, the ability or the eligibility to join, right? So let's roll it, right? First one, KSOC 312. So I don't know if KSOC is in the group. If you are not, please message me on Twitch, right? We should be able to get that DM squared away, right? So KSOC. All right, and we will do another one, okay? All right. RJCM 95. Okay, RJCM 95. Okay. So this person, so hold on, let me write this down. We got KSOC and RJCM 95. And then I'll do one more. I'll do one more, Prosy, okay? Just for you. Let's see. Let's do one more. All right, it's Ravina R. Killa. All right, Ravina R. Killa. Okay. So, please check this out, right? Or DM me your name and stuff, and I'll get you a Discord link. Remember, guys, I'm going to be streaming on Twitch all week. I'll put a tweet out, but look for the notification in the morning. I start at 8:30 in the morning. We will select contracts. I will go through supply and demand in the morning, as well as that directional kind of analysis that I showed you on the cues. I have been accurate every single day as to where the direction will interact, or at least go to throughout the day. So you just DM me, RJCM. You just DM me on Twitch, okay? As well as, we'll be having some more live sessions this week. I'll probably have one like Tuesday and Thursday, right? Tuesday and Thursday we'll have some more live sessions, right? But if you have enjoyed this live session, if it's helped you on your journey, or at least benefited you in some sense or way, on your trading journey, right? I hope that you're able to apply any of these strategies that I have displayed to you this evening. So I will post a Discord link. If you have any questions, please feel free to DM me on Twitter. I have a ton of DMs to get through. So if I don't respond to you, I'm sorry. Tonight, right? I'm gonna try to get through DMs if I can. But you guys, right? Take it easy. Enjoy the rest of your evening. And tomorrow we will follow our rules. We will buy on dips, and we will be profitable. I mean, that's without a doubt. I have no sense of, uncertainty about that. Even if we take a losing trade, we will be able to manage our risk appropriately, take our tight tag, small loss, whatever you want to call it, and find the next best setup that is on a pullback, low risk entry, giving me, the best position or edge in the market currently available. Okay, so you guys take it easy. Yeah, here's the Discord link. Right, you guys take it easy. Remember, 8:30 a.m. Eastern Standard Time, I will be live day trading. Okay, you will see me break down charts, take trades, call them out, and walk them through tomorrow. Okay, this is not a shadow trade stream. Come through to learn. Okay, come through and learn. Okay, because we've got I think 640 people now in the Discord right after majority of the payments clear. About 640 people looking to learn and better themselves along this journey, right? You don't have to do it alone. So I'll catch you guys tomorrow, 8:30 in the morning, Eastern Standard Time. Have a good night, get some rest, drink some water, and I will see you bright and early. Thanks.